Hi everyone, today we'll be looking at the reserve risk chart and how you can use this tool to help improve your Bitcoin investing and analysis. This chart, as well as many others, are all freely available on lookintobitcoin.com, your #1 source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. So what is the Bitcoin reserve risk chart? Well, as you can probably tell immediately, this is one of the slightly more complex charts we have on lookintobitcoin.com. We can see just from the key here, there's many terms that you might not be familiar with, and the actual calculation of reserve risk, as we can see here, Bitcoin price divided by the HODL bank, may seem a very foreign concept to you. But I promise by the end of this video, you'll know what we're looking at. So to actually calculate the reserve risk, there's a few steps we have to take. And the thesis behind this chart is that in general, longer term holders of Bitcoin have a greater knowledge about Bitcoin's market cycles and identifying good times to buy and sell Bitcoin. This is due to the fact that as they've been in the market longer, they tend to have more experience and more expertise when identifying periods of very overheated conditions and maybe when periods of Bitcoin is at a discount. So once we can appreciate this concept that the longer term holders of Bitcoin may have a better understanding of when the best periods to buy and sell are, we can use that information to actually calculate, using the data available on the blockchain network, a few different key metrics that we can use to calculate the HODL bank. So first of all is the Bitcoin days value. And this is simply put the quantity of Bitcoin multiplied the number of days since it was last moved. Now this might seem complicated at first, but simply put, if I were to buy one Bitcoin and hold it for 7 days or a week, I would have added 7 Bitcoin days. It's simply multiplying the quantity of Bitcoin by the last time it was moved. And the reason we do this is because it allows us to attribute more value to the coins that have been held for a longer period of time. As the longer the coin hasn't moved, the higher the Bitcoin days value is. Once we've calculated the Bitcoin days, we actually calculate the Bitcoin days destroyed. Now, it's not actually possible to destroy any Bitcoin. That's just a term we use. The Bitcoin days destroyed is similar to the Bitcoin days, but rather than just counting up the amount of days since each Bitcoin was last moved at, we actually aggregate when the Bitcoin was moved. So in the previous example, I said if I bought one Bitcoin and held it for a week, I would have had 7 Bitcoin days. Well, if I was to then transfer that to a new wallet, or if I was to sell it to an exchange, I would have added 7 destroyed Bitcoin days. So as the blockchain is open and we can track every transaction, we can constantly monitor the Bitcoin days destroyed value and then adjust that by the current circulating supply of Bitcoin. So right now, as I film this, the circulating supply of Bitcoin is just above 19 million. So what we can do is aggregate all of the Bitcoin days destroyed throughout all of Bitcoin's network history and divide that by the current circulating supply. And here's where we can actually figure out the first value we see on the chart. This VOCD stands for value of coin days destroyed. So we can see this constantly moving up and down, this value of coin days destroyed, which is multiplying the Bitcoin days destroyed by the current price of Bitcoin and then summing that up over time. So if I just add back on the Bitcoin price, we can see there are periods where the value of coin days destroyed is far beneath the Bitcoin price. And these tend to be areas where the Bitcoin price has dipped fairly substantially. This is due to the fact that people are just less willing to sell their Bitcoin once price has decreased a fair amount. People more want to sell their Bitcoin as price peaks. So we can actually see periods here, such as Bitcoin peaked in late 2017, that the value of coin days destroyed actually far surpassed the actual price of Bitcoin. And if we zoom in just to the recent period of price action, we can see here that as Bitcoin hit its all-time high region back here in early 2021, even though price was sitting at just above $60,000, we were having value of coin days destroyed value far surpassing $100,000 at a time. So now that we understand the value of coin days destroyed metric, we can actually add in the MVOCD, which is just the median value of coin days destroyed value. Now this is just taking the previous 30 values of the value of coin days destroyed and averaging that out. It is just a 30-day moving average of this very jagged VOCD line, just to give us a smoother idea of what's happening. So again, if we are just to zoom in back here to the 2017 peak, we can actually see periods where this moving average line has surpassed price have usually indicated that price may be over exuberant and topping out, as these tend to indicate that a lot of Bitcoin that hasn't moved in a substantial period of time is now beginning to be transferred, potentially to be sold. And the same is true for the downside. When we see this value of coin days destroyed average far beneath price, this often indicates that very few people are willing to part with their Bitcoin. They see it as more of a store of value at these periods and are wanting to hold on to it for as long as possible into the next cycle where they think they can get a better price. And now that we understand the VOCD and the MVOCD, we can simply collate all values of the value of coin days destroyed and just cumulatively plot that over time to get the HODL bank. We can see this HODL bank value in an almost constant uptrend bar a few periods of extreme sell-offs. So now we have this HODL bank value and understand how it is calculated. We can actually just divide the Bitcoin price by the HODL bank to finally understand reserve risk. So as we can see here, we almost have an oscillator, which is the reserve risk value. And as you can probably immediately see, we have areas where reserve risk has dipped into this green zone here, which historically has been a great area for strategic investors to accumulate Bitcoin for the long term. And as we can tell from on-chain data, that is what is happening in these periods. We can see that people aren't willing to part ways with their Bitcoin. No one really wants to sell, knowing that they could have got a much higher price previously, and they're anticipating higher prices in the future. And as this reserve risk ratio increases substantially into this red zone here, this indicates that a lot of old Bitcoin that hasn't been moved in an extended period of time is beginning to be transferred for the first time. This is usually indicating selling by not only long-term holders, but quite often larger players or smart money in the Bitcoin market. So what we can actually do on the Look Into Bitcoin chart is just isolate this oscillator to really clearly see the periods of buying and selling where strategic investors would have been provided outsized returns. Right now, as I film this video, the Bitcoin price is just around $23,000, and we can see that the reserve risk is at some of the lowest levels we've ever seen, only seen once before in late 2015. So is this historically going to be a great area to accumulate Bitcoin? Well, we'll have to wait and see. In hindsight, it's always very obvious, but right now when the market is full of fear, we're going to have to wait and see if the market is about to rebound. One interesting observation we can make with the reserve risk chart is that the actual ratio value tends to be decreasing over time. Now, this may be just due to the fact that Bitcoin as an asset class and the Bitcoin network utilization is maturing, and we're getting these less speculative and volatile cycles as the asset class matures, and we almost become more of a traditional asset class in tune with the bigger global financial markets. So it may be worth, rather than just waiting for these green and red zones, to actually see historically, is this an area where the reserve risk may have previously topped out, or potentially as we are contracting and ever much decreasing historically in the reserve risk ratio, maybe next time that price is just reaching this trend line, consider taking some profits. So just to summarize, as the reserve risk is basically charting the willingness of longer term investors to part with their Bitcoin, the reserve risk ratio has often been defined as Bitcoin's opportunity cost. If you believe Bitcoin to be in a period where it is very much undervalued, it doesn't really make sense to be transferring to sell your Bitcoin. Those are times where you want to hold onto your Bitcoin for the upcoming cycle and potentially even accumulate more. What we can also see is as these older coins are beginning to be moved on the network, this can often indicate that smarter money, larger players in the market are beginning to take some profit. And on the contrary, as the reserve risk ratio drops into the green zone, this can often indicate that people are holding on for the long term and has historically been a great area to accumulate Bitcoin for the upcoming cycles. If you like this video, then please visit lookintobitcoin.com. We know Bitcoin data analytics can be complicated, but we want to help you understand the key principles so you can optimize your Bitcoin investing and analysis. Also, as a side note, if you'd like more information on how the reserve risk is calculated, the exact formulas behind it all. If you go onto the chart here and just beneath it, you can see in this information section, we have more in-depth analysis behind the history of the indicator and how you can potentially fine-tune it to be even more accurate for your trading and investing. Don't forget to like the video and subscribe to the channel to learn about all our other charts and gain even more insights. Thank you very much for watching, and I'll see you in the next one.